Oh, yeah,
Oh, yeah, I see. Yeah, I see.
bro, that was crazy. Okay, welcome aboard, everybody. We welcome your eyes and eventually your knowledge. But what we're going to go over today is just basically the entire strategy that we've been having some success with. This is day trading slash swing trading, whatever you want, depending on the time frame you get in. So Keith, can you see my screen, Keith?
Yeah.
Okay, so we're gonna start off in the Costco example, and basically you can do this with any ticker. As a matter of fact, this is a completed drawing.
I made over $2 million day trading. And day trading is the best way to
Is that you or me?
your income if you're making over $10,000 a month. It's because
Is that me?
no prior
Yeah,
experience,
that's you.
no technical skills at all. You only need 1 hour a day. The most
Oh,
profitable
yeah, it
stock
is.
market.
Shut the fuck up. Okay.
Okay, cool. So basically, I want to show you this completed drawn up chart. This strategy involves two time frames. Mine, the higher time frame is the frame that I say we find the structure. In other words, we draw up our trend lines, which you see these white lines, identifying that you can see we are in a upward trend. So we find the structure on the higher time frame. Now I say higher time frame because that's where you draw your structure, and then we flip down to the next lowest time frame, and that's where we wait on the price action. I have an analogy I've been saying. It's like the deer. If you run out into a forest and you just start deer hunting and you shooting deer because you see a deer 60 yards away, you're not going to be super successful. The way most successful deer hunters are is they go out, they lay in the cut, they got their camouflage on, they get in the deer crossing and they lay up and they wait on the deer. And that's the analogy that I've been sharing with this. Because basically all we doing is on the higher time frame, and for me, you see up here my cursor up top, I'm on the 1 hour time frame. So I set my trap. In other words, I draw my trend lines. I come here and I get the trend, I can get the tools. Right here is the trend tool. And I draw my trend line. And we'll go over how you draw your trend line when I go to a open chart that don't have nothing on it. So I basically set the deer trap always on the higher time frame. So what are the time frames that you can trade on? You can start on the day time frame. You draw it up on the day time frame, and then you would go down to the 4 hour time frame. Remember, you go on the highest for the structure, and then you go down to the lower one for the price action. So Keith, feel free to ask questions too, man. If we get to a point where you want some clarity, this is not just instructional. They can hear, anybody tune in this can hear us dialoguing or whatever, because you're doing this and you on board here, you live. So we need to cater to your needs too.
Only question I got when you go over the boxes, like see where your bottoms is, like your the guy who was you told me to watch.
Yeah, we'll get to that. That's a little bit down the way.
Okay.
We're gonna definitely get to that, and then you can ask all your questions, and we'll take care of it. So, and I'm gonna draw that up, that rectangle. I think that's what you're saying, the box.
But yeah, that and your lows too, but we'll go through it. Okay.
Right. Yep. We'll get to that on a clear chart, and I'm going there next. But basically, the time frames is if you start out finding structure, if you say I want to do the day time frames, those are quite accurate. The only thing about doing these higher time frames, you would mark it up on the day time frame, and then once you had all your triangle there, as you saw, and your trend lines, you would come down to the 4 hour time frame. And this is where you would enter the trade. In other words, you would shoot the deer. You would wait on the price action to come into your zone. And then you would enter. You would set your stops and you would set your targets. Okay. Now the other time frame you can do is you can chart it out on the 4 hour time frame again. you're gonna use 2 time frames. So if you chart it out and you find structure on the 4-hour time frame, you would drop down once you had everything that you see, like on my screen right here on Costco. Once you did all the charting and found the structure and the trend, you would drop down from the 4-hour down to the 1-hour. And this is where you would wait on your deer, so to speak, your price action to come into your zone. All right. Now, if you're like me, the reason why I go down to the 1-hour is to find structure, like you see right here. I draw these up on the 1-hour because I like to see the pips. I can see this bottom right here. This is a major swing level. I can say that's the utmost bottom. And then I can come up with my trend line to the utmost top. And that's a major swing level as well. We'll get into that. These are major swing levels. So I can see them. Now, what's the pros and the cons? Like I said, higher time frames in anything are going to give you more accuracy, more of the real stock and how it's moving. You up there, you looking at this stock, I like to say way up in the Goodyear blend. You can see it moving, you can see everything that's happening. But when you come down to these lower time frames like this, they tend to be not as accurate. Now, I kind of overcome that a little bit so far anyway, it seems like it. And I'll tell you how, and that's simply by waiting on the double tops or the double bottoms. But I'll get into that as well. So I mark it up, I find the structure and the trends on the 1-hour. And I do everything, all my charting. And then when I get it all set up and I get my alerts, I go down to the 5-minute, what am I saying? 1 hour, and then I go down to the 15-minute. This is where I wait on my deal or my price action to come into my zone. My alert will go off, and then I'm looking for certain entries, and we'll go over that. So you're always using 2 time frames. The reason why I use that 1 hour and the 15-minute time frame is because I get way more trade options to get into. I get a lot more opportunities to trade. If you trading up on the day time frame, then you drop down to the 4-hour to get into a trade, you're probably gonna get maybe 1 or 2 a week. The price moves a lot slower. Okay, so keep that in mind. So let's go to an open chart. Let's go to let's do this. I'm going to clear Costco out. No, because we had a lot of success on this today.
I think you can save that chart. You can save it.
I can say this. Let's do this. How do I say this, Keith?
Go to shit. Is it studies? No, hold up.
You know what? No big deal. I can just delete this.
Edit studies.
Yeah, let me keep this in mind right here. This point right here was
Where did I do that? Oh, you know what?
316. Okay. I'm gonna clear this. Let's clear this.
Okay.
Clear this.
You're not gonna save it? You're gonna get rid of everything?
I don't need it.
Okay.
Oh, so now you're looking at a clear chart. Say for whatever reason, and we'll get into this too. I have these histograms and see like right here at AZN. I'll click on it. AZN. Let's say for whatever reason I was looking at AZN. No, let's just look at Costco. Let's look at Costco. Now I'm gonna click off of this so you can see these S's. You can see what color they are because I'm gonna talk about those. Let me click off of it, but keep your eyes on Costco. So Costco, SSS, all of these just basically means it's stacked. The color is green, and that means it's stacked in an upward trend. Stack means we using the EMAs. EMAs, you can look them up. We don't have real time to go into those now, but exponential moving averages. And it's letting me know that they're all stacked, which means they're stacked upward, which means it's an upward trend. Now, usually I like all of these histogram colors to be cyan, but with this trend and the way we trade, it really don't matter. It really don't matter. If you go up here to AZN, this is where I normally like to look for trades.
Right.
All cyan, which means stacked on every time frame. All S's, which means stacked on every time frame. But we can draw that up. But let's go back to Costco, knowing, and then this is why. Let's go Costco. So now we're looking at a chart. Now, my chart, I only have the
The 20.
EMA, the 20 SMA. What is it? Did I move it? Yeah, simple moving. We got
Mhm.
the 20 to 50 and the 200. 20 to 50 and 200. Matter of fact, I think this is the 50. The green is the 20. The blue is the 50 SMA, and the red is the 200. So we got an open chart here. This is where you start. Again, I start on a 1 hour time frame. Once I get it drawn up, I'll click down to the 15. So what I like to do is I like to pull back like this, and just as a casual observer, you can see that we are in an upward trend right here. Pretty much. We got some consolidation starting right here, but I'll show you how it's still an upward trend until certain major swing level is broken. So I'll come way over here.
Yeah.
Okay. And I'll get my trend tool. You're gonna start, you get familiar with your tools. I got a little margin up here where I just put my cursor and I can come up here and get my trend. Other than that, you'll be clicking on your mouse to
Right.
get. Okay, but again, video. So I start here, 2 clicks, and I'll come all the way up here, 2 clicks, and I'll come down to a swing low, up to a higher high. Whichever one of these is higher, doesn't matter, they're close together, to a higher low. I broke through, look, price action broke this major swing level. When it breaks through, I'll start saying it now so you'll get familiar. When you break through a major swing level, you see price broke through. And what do I mean when I say broke through? I'll show you.
Broke through the higher high.
Right. When it breaks through, yeah, that's, you see price, it broke right through this level. You see this price action just, when it breaks through this area, this is where you look for trend continuation. I'd say that for the first time because you'll hear me say that a lot of times. When price action breaks through, you look to the nearest, the latest major swing level. These peaks and these valleys, the utmost lowest and this utmost highest, these are called major swing levels. This is a major swing level. This is a major swing level. Anything like this over here, if we don't break through the major swing level, this is called consolidation. We got nothing but consolidation because we did not break through that swing level, that major swing level. We did break through this one, but this one is not our most recent one. When you look at this, which one is our most recent major swing level that we broke, that price action broke? It's this one right here at March the 16th. You can see right over here. Right up here, you see March 16th when I put. So this is how you draw up your structure. And remember, go to the higher time frame to draw your structure up. I use the 1 hour. So we just put the trend lines on here. And as you can see, we got all the way up to basically where price action stopped. And now we have, you can see, you just start somewhere, give yourself enough room and start drawing your trend lines. Now, you say, well, Gerald, why didn't you come here? And how do I know where to go? Well, I'm really just looking for the highest high when I started right here. And then I want to pull back. Now, what constitutes a pullback? And if you watch these videos, there's no real objective way, he says, to say, okay, well, a pullback is X amount of pips. But a pullback is usually like 2 or 3 pips. I mean, it has to be a move too. See, this is a pullback. It's price action peaked up here.